All right, hi everyone. Welcome back to another weekend of Stop Nitpicking with IMP. All right, this is Jeremy and myself, Terrence, taking the session together with all of you. All right, now, so let's give it some time and wait for more to join us in this weekend session once again. All right,
Hi everybody.
All right, hi Irene, hi Ngafu. If you're joining us right, you've got a very fast bike there, Jeremy.
Oh yeah.
We have some of you are probably joining us new from our public Facebook group. Can you just click on the StreamYard post with the link that they provided, all right, to allow StreamYard to access your Facebook? So this way we will be able to know who's making comments in our live sessions later on. Yeah, all right. Okay, now, so on top of the Facebook post, you should see a StreamYard link over there. And in that link, just click on it. So we will be able to, how do I say this? We'll be able to see who's commenting on the back end over here, all right, on our system. All right.
Hi, Christine.
I'll just do it here as well.
Hi, Risi. Hi, Uncle Fu.
All right, hi Christine. Yes, welcome. All right, so yes, we do have some of you who are new into our Facebook group who are joining us in the session. You have not allowed StreamYard to access, or not really access, but to approve your Facebook for comments. So we're seeing you on the back end over here as simply a Facebook user. Okay. All right, hi Isaac. Welcome back to another session. All right. Okay, so without further ado, let's get the session started. The rest will be coming in later on. All right, we'll have to do a watch back on the replay. So welcome everyone to another weekend of Stocks Nitpicking with Jeremy and myself. So this week we have something different, all right, because every week we have some of you are joining us from our investment community. All right, so you know typically what kind of stocks that me and Jeremy invest on a usual day-to-day basis. But today, this weekend, we're going to do something different. Okay, we're going to cover a stock that we never usually look at or never usually invest in. Okay, but we usually bring them or highlight them out when we believe that they have a good story to tell. Okay, they have a good story to tell. And today we happen to pounce on one, so we're actually sharing it out with all of you over here. All right, now. So once again, if you could help us by clicking the share button for this weekend's live video, it would help us. It will also allow you to connect with your friends who are already investing, maybe in the stock market of US or as well as using options. Let them know, all right? Let them know they can join our Facebook, public Facebook group. Okay, as you can see, we'll be starting to post more and more information out there as well and trying to seek for your discussions and inputs. I've made a post earlier today. If some of you could leave, your thoughts and ideas in that post itself, it would be great. Okay, because I did it in that way because I have the answers or I have some thoughts after that will come in part 2, part 3, and part 4. All right, but before I do that, I just wanted to see what some of you or your thoughts are in such a hot, popular company that has been, talked about by many people, or shared about in social media by many people in recent days. Okay, now, so once again, click the share buttons and we will get started. Jeremy, are you ready?
Yes, I'm ready.
All right, this weekend is going to be a very interesting company. All right, now,
yes,
why?
It is.
Yes, why? Because think of it this way. If you know Facebook, all right, they do what Facebook does. If you know what's Twitter, they do what Twitter does. If you know what's Tinder, they do what Tinder does. They do everything.
Yes.
All right. I think including a little similar to what TikTok is doing right now, right, Jeremy?
Yes, in a way, yes.
Not exactly, but somewhat, right? Yeah. Okay.
Yeah.
All right. Now, so think of it as an all-in-one for these major platforms that I mentioned earlier, right? And that's what makes it. Yeah, that's what makes it kind of interesting in terms of today's topic over here. Right. So once again, before I hand over to Jeremy, If all of you could do this, I'll just type it out in the comment section right now. Okay, to all of you. Yes, to all of you. Okay, could you just go to the StreamYard link /Facebook, streamyard.com/Facebook. All right, and then let StreamYard approve your accounts. So we'll be able to see who's making the comments as Jeremy go on the session later on, okay? All right, awesome. So let's get started over here. Jeremy, take it away. What company are you looking at?
Okay, before I start today, I just need to give the caveat that because the numbers today is going to be so boring and so one-sided that I need our viewers to exercise some discretion here. What I mean is that you have to be very, very careful with positioning your trades. If, let's say, for example, you're going to decide that you're going to take a trade on the company, because what we don't want is a case of a hubris for the company whereby we are so one-sided on a good side positive here. What we mean is that because the numbers look so nice and all, I don't want a case whereby we get ourselves burned because we position a trade as too heavy than our usual standards here. Okay, as per usual, our sharing is for educational purpose. So do your own due diligence before you take on any trades if you are going to do it. And we might or might not have any positions in these companies that we mentioned today, depending on the time you watch this video. All right, so without further ado, I'm just going to go straight into the company here. And the company we're going to go to today is MOMO. Right, so MOMO is going to be a company that not a lot of people would have heard of. It is actually a China-based company. It is a social networking company that's mobile-based. Think of it like a social media company, whereby it allows users to expand onto their social networking networks. So it's going to be like a hybrid of Tinder, Facebook, as well as Twitter. Now, MOMO as a company, they have a few different platforms, but the platforms will actually include like the mobile application, whereby they allow their users to actually share contents on the platform itself, right? So they also have other standalone video application called Honey, which is something like a live video content onto their MOMO mobile application, right? The primary revenue for these companies is actually they kind of generate the revenue from these live video services as well as from advertisements, marketing, mobile games, and other things like that. So if let's say, for example, you have seen this advertisement for this app called Tan Tan in Singapore Facebook context, yes, MOMO actually owns Tan Tan in a certain aspect as well. So this some of these companies that MOMO as a group owns will not be too rare, or rather not too not so unknown to you. Yeah. So I'm going to go straight into the numbers because the business model in terms of what it does, right, is actually very straightforward here. From what I see here, and the numbers really make sense to me. Okay. So numbers are actually taken from Morningstar. Just take note, all the numbers that we'll be sharing today are based on Chinese yuan, the renminbi here. Okay, so this is a bit different from what we usually see. Right. So in terms of the trading returns of the company against the sector as well as the industry, you see that this company, which incorporated in 2014, it is slightly under the radar. What I mean is that it really hasn't really been performing according to how the sector has been doing, right? You see that in the last 5 years, it's been doing 3% versus the sector of 18%, and in the index, which is about 8% thereabout. And 3 years from now, it's been on a downtrend in a sense. So in terms of trailing returns, there isn't really anything fantastic to look at. But over here, what we're trying to do is we're trying to see if there's any value we can look for. So it's not often that we look at trending stocks. So this is not something that I'll be concerned about, right? So moving along. Okay. In terms of the snapshot of the financials of this company, you see that this company has a very low price to X ratios. By that, what I mean is that price cash sales, as well as price to earnings ratio, right? So essentially, right, some of our viewers would have noticed that anything that's lower than 10 for price cash flow, price sales, as well as price earnings, right, is actually quite low. And but I do caution you against like looking at these ratios on their own in a snapshot, because what we do as a fundamental analysis, you should try and compare it against the company's historical record. But just looking at the current snapshot as a photograph of its financial statements, these ratios do kind of stand out because they're really, really very low. All right. The price book of 2.27, right, does effectively rule out any value play under the book value of the company here, right? So moving forward, we see that in the last 3 years, right, ending in December 2019, this one I must emphasize, ending in December 2019, company actually has a okay, respectable growth for the past 3 years. Now, this is a very new company, so you will notice that for a new company, especially for tech-related companies, right, they tend to have very inflated growth in terms of revenue, as well as operating income and net income here. So I do expect that this growth, right, to really slow down gradually as the size begins to, the company size begins to grow bigger, and when the market slowly saturates. But over here, this is still good in terms of how it's growing up. And we see here, for their short-term coverages as well as for debt levels, right, it's still very healthy. Like for the company, it's actually able to cover about 4 years plus of their short-term liabilities, as well as for interest, right, we're looking about 50 plus times, and debt to equity level is not too excessive. You're gonna feel that the numbers for the company is really, really boring. So I'm just gonna like try and speak through this part, okay? Right. So this company is also profitable now, right now, 6 years since its inception, right? So we're looking at that margin of 19%. So this is really healthy because as a company matures, right, the net margin slowly will taper down. So as a 6-year company at a net margin of 19% is still good, right? So in terms of the income, we're seeing that operating income of the company, which should form the core and spine of its income, is on an upward slope. And the net income is also increasing up to the trailing 12 months return for this company here. And the diluted earnings per share for this company is also in line as well. So up to this point, there's no really any major red flag that I need to point out for the company here. And if I move forward, assets for the company has been generally growing, while the equity portion is on a general uptrend. Okay, now, you must understand that I say general because it seems that on the quarter one of the year, the total equity for the company take a slight dip, all right? Because I think they took on some additional liabilities for the company. But as a young company, this is expected because they need to move their funds, be in terms of liabilities, be in terms of debts or other means, right, to actually invest into means and to actually grow the business or to invest into new projects and things like that. So that's not much of concern as long as they don't go out of hand here, right? So it's still fine. And the operating cash flow from the income statement as well, translating over, is also good, is healthy. And the free cash flow is still healthy as well, despite the COVID-19 situation here. All right, so we're looking at a case whereby the company doesn't seem to have anything major in terms of like red flag. And if I look at the valuation of this company, this is where it really, really, truly shines. Yeah, you see, the current price earning, price cash flow, and price book, right? They are below the 5-year average for the company. Right. So in a certain sense, what you're trying to say is that against this 5 years average, right? This is at a bargain point. And it's not just against the company 5 years record average. You're looking at the same case for the index as well, with the exception of the price book, of course. So price earnings, price cash flow, right, is actually lower than earnings, probably lower than index as well, lower than the 5-year average for the company. So these kind of signs point out to a certain level of bargains, right, that we can look at the company to enter for a position whereby we can either long the company outright or we can use the options to actually generate some cash flow on this company as well. All right. And The returns ratio in terms of the return on assets as well as return on equity is also good. You could see it's actually in line with the 5-year historical return. I mean, in terms of 5-year average, as well as the index itself. So what I mean is that you see, sometime in 2014, the company incepted, so it was negative. 2015, the company is slowly finding traction. So 2016, 17, 18, 19, I take out 2019, 2016, 17, 18. This is when the company is moving in the range of 20 to 30%. So if I use this as a benchmark, so 30% is around there for the company. So sometime in 2019, it kind of slowed down. And we're looking at trailing 12 months for the company now. Sometime in August now, it has already done the whole, the entire returns. Like the return, it already matched the returns on assets for the 2019 figure. Okay. So if you really look at this, what it means is that this company has likely went through something in 2019 until they are now. And because of that, it is a little bit depressed. And this gives us a good entry point or a reasonable entry point to park our funds into this company to see whether we can do anything long term. Okay, this is my view when I run through the numbers here. And if I look at the returns for the margins for this company, the gross margins is at close to 50%, and the operating and the net margin is about 19%. Right, so it still has room to be lowered for a new company. Okay, this company, right, they have paid a total of 2 different dividends, special dividends, since its inception. So it's going to be very different from the type of companies that we look at, similar to what Terence has mentioned at the start of the session here. So if you're going to do a company, if you're going to park and base a decision on this company, do not use dividend as a basis for your action. Just ignore dividends all the way. Okay, so if I take a look at the Stream profile of the company, we're looking at a book value per share of $9, whereas company has current share price about $20. So those of you who would have certain level of experience with options trading will realize that it's not going to be possible for you to take anything close to the book value, right? And what I've looked at in terms of the choice of trades possible is actually a budget put spread. And now, the budget put spread that I have in mind here is slightly different from the budget put spread that we usually talk about. Okay, this is why. So, okay, the company actually has scheduled, if I'm not wrong, an earnings sometime in, I think it's the 3rd of September, if I'm not wrong here. Yeah, but I know there's an earnings schedule, upcoming one. Okay, so because of the excessive amount of optimism in terms of the surrounding the company for a certain level, like certain analysts, right? I don't want to be caught in a position whereby if the company doesn't perform up to the expectation and then the share price drops. So what I'm going to do is that I'm just going to take a cash covered put, but with an insurance. So I'm going to just use $116 per contract, and I'm going to try and collect 35 cents per contract for this, which will give me about 30.17% returns and annualized about 74%. Now, if let's say, for example, after the earnings of the company, when it's announced, if the stock price goes down, then I have to assess, do I want to own the stock outright? If I do, I can just close the position and then I buy the company's stock from the market directly. Alternatively, if I don't want to own the stock, I just close the position and then I'm done with this trade. So I just take the loss permanently and I'm done. Right. So this does gives a little bit of flexibility in terms of how you look at budget put spread. So this is an alternative to how you can look at budget put spread. Okay. Now, there are some caveats to looking at this company because I did mention earlier that you need to be very careful when looking at this company because everything seems so nice. Right. The thing is this, okay, because all the figures are actually shown in the Chinese yuan figures, the renminbi figures. There's this issue whereby because of the ongoing trade war and because of the excessive quantitative easing by the US, the exchange rate between the US dollars as well as the Chinese yuan might not be able to hold at the level that they are. And because of how Chinese yuan, they have their foreign the exchange rate policies, whenever they shifts, right, it's going to be a one good lump shift. So if that happens, right, we might see that the value that we own from this company, right, will be eroded by the shift in the exchange rate if it's against us. So you have to be very careful and you have to be comfortable with that shift if it does happen. All right. Alternative. And the next part is you will notice that as I run through the figures, right, this company is actually slowly increasing its debt level. Now, I don't see that there's a trend whereby it's going out of hand, but if it does goes to a point whereby they slowly go up and up until they can't really handle it, then this will be an issue as well. But I don't see this as an issue in the next 6 months. Also, this will be a potential value trap if they don't continue a trend. Meaning, if they say there's another drastic change in consumer behavior for their or their consumer base. Now, this company, because of its profile being under the radar, it has a very wide bit of a spread, meaning there will be a high slippage when you take the trade. So you have to be very comfortable with this high slippage situation, and you're very patient with queuing for the trades if you really need to enter the trade for this company, right? So when, let's say if we already enter the trade and it goes south, you need to be prepared to cut loss. Or if you're part of an IMP community, you must be able to learn. You must be willing to activate the IMP repair if you are comfortable with owning a stock in the long run, right? So actually with this part, I'm just thinking, right, whether there's any other wins that Terence would have to structure a trade for this company, because as I'm looking at this company, right, the profile really stands out, but because of the high slippage situation, right, there's kind of like a lack in terms of what I can do for this company as I look at it. So Terence, do you have any input on that?
Yes, I do have an idea. First, let me just get to some of the add-ons in terms of what I want to add with the company itself. First, basically, of course, paling in comparison with, what are the market hot favorites right now, right? Many people would choose rather not to look at MOMO as a company, right? Because you have all your Shopify's and your the new tech basically, all right? And even Apple, Facebook has been, what we call the hot darlings in the market. Okay, but all I want to say and show is really this. If all of you are familiar with the NASDAQ, all right, the NASDAQ index, all right, can you just leave a comment, yes over here if you're familiar with the NASDAQ index, all right, if you're familiar with the NASDAQ index, all right, can you just type yes in the comment section, all right? I just want to highlight certain things to all of you over this weekend session, if I can and if I might, okay, to basically get all of you up to speed as you continue to make about your investments, okay? All right, so there are people who are not familiar with the NASDAQ. All right, okay, Uncle Fu, yes, thank you very much. All right, now, so basically the NASDAQ is an index, okay, index of mainly the tech stocks, okay, and of course including some biotechs over here, all right? So they're mainly a technology index. So what happens over here is in NASDAQ, we have at least, 100 stocks in the index itself, which is the NASDAQ 100. Okay, but if you're not familiar, what's happening right now is 10 stocks, okay, 10 stocks inside the index components itself. They control almost up to 50% of the entire index. Okay, all right, now, so 10 stocks account for 50% of the entire technology index itself. Now, so of course, while every day we are seeing, your US indices going up, which is of course your S&P 500 and your NASDAQ index itself, right, going up. But that's because all the cash and all the money flow has been generated into the 10 stocks. So, while they've been generating into the 10 stocks, these 10 stocks will be flying, okay, will be flying. But you must also understand one thing, right? Think of your money flow. Okay, think of your money flow right now as a major concert, okay, for a rock star, as a major concert for a rock star who has just opened the doors. Okay, now what do you think will happen when they initially open the doors, all right, when it comes to the concert itself? Right now, of course, you have the first row of people who are already there, right? They'll be pushing it in, right? And then you have your second row who's pushing the first row just to try and get in and possibly squeeze ahead of them, all right? And then, of course, that will follow suit with the third, the fourth, the fifth, the sixth row, all right, until the entire concert hall is filled. Okay, but can you imagine what makes it worse when this concert was announced as a free concert? All right, that means it's not payable, it's totally free. All right, now, so what's going to happen is you're still going to have droves of people, right? Even when the stadium is crowded, okay, that keeps trying to push themselves in, right? So I'm also sure that most of you have probably seen all the Japanese videos, right, of how they cram the train in the morning or peak hours. Right, you know, how the last person inched themselves in, right? It's pretty amazing. But can you also imagine, like, you know, if the whole environments get that squeezy, right? All it takes is for sentiments to turn. Okay, and the moment sentiments turn, right? Okay, it will get ugly. All right, it simply will get ugly because when everyone scrams, it's as good as us seeing a major, you know, pardon my use of terms, but a major explosion, right? It's like us seeing a major explosion happening in the tight space, right? And of course, that will follow suit in the prices. Okay, now, so just having said that, yes, while you enjoy your profits in a lot of these great high-flying companies, do make sure whatever profits that you still have, all right, they are protected. Okay, this has never been, you know, the IMP style, which means to invest in the growth and, you know, really high-flying stocks. Okay, this has never been our style over here. So the only thing we can do is to remind you know, investors out there that as you continue to grow your profits in such stocks, congratulations if you are already in, congratulations if you are making a big buck in these kind of stocks right now. Okay, but you have to look at it as a sense of they are still what we call the speculative gains. Right now, so if you don't want to lose them, just make sure they're protected. Okay, now, so just to highlight one of the reasons why we look at MOMO this week, all right, it's really the fact that if you understand, all of us are on our phones right now. Okay, so everyone is using our phones, and you know, anything that is more and more mobile based provides a big revenue source. And MOMO has been, you know, revolutionary in the sense of trying to make themselves a mobile based networking platform, but it also enables users to find each other so that they can establish, you know, what they call social relationships, right? Based on their locations, their personal profiles, as well as their shared interests, right? Now, so as Jeremy mentioned earlier as well, they also own that dating app, you know, where, you know, they have the Tan over here, or how you pronounce it, I'm not sure. Okay, and, you know, they are pretty much the Mandarin or Chinese version of Tinder as an app. Okay, all right, now, and we all know what Tinder has brought for their parent company, the Match Group. All right, it has brought a lot of revenues to the company, which is of course listed in US stock market. All right, called the Match Group over here. Now, so what MOMO has become is really the part and daily life in China. So it's one of the leading social media platform right now. Okay, and their active users are definitely continuously growing. Okay, and their mobile app, okay, basically enables features like messaging, photo sharing, games, location-based services, and they are all free. Okay, but apart from all these free services, they also offer what they call premium subscription package that has additional functions and privileges. Yeah, okay, so this is also part of their business model over here. Now, but the key again is this. These are all the fronts, because ultimately, right, the big key right now these days is really in data. Right, with all these users and all these intimate details that they can capture from their users, right? Okay, they start to bring in a lot of advertising dollars. Okay, all right, they start bringing a lot of advertising dollars because, right, they are able to start targeting, all right, the messages to their users itself. So a little bit like, you know, what Facebook does right now, where, you know, they try to target your marketing message to the right people as much as possible. All right, so MOMO is kind of able to do that. And right now, they have also included what they call their newest innovation called the live video, basically. Yeah, okay, of course, it's not so new right now. Okay, but they have this live video function right now, which I think they have a reality show, right, Jeremy? I think it's called what, Fantasy or something like that.
I'm not too familiar with that, but I
Maybe
was just
that's
thinking, right?
maybe that's a translation of the Chinese name itself, I think.
Yeah, but I'm just thinking, right, for our viewers out there, right? Just leave a response, right? Yes, no will do, right? After we explain, right, the profile of the company, do you understand what does the company do? Just give us a response. If you understand, yes. If you don't understand, no. Can we have a response here?
All right. Okay. Now, also, while they respond, Jeremy, I'll just keep going for a minute. So what has happened over here is, while the understanding or the message of such a company, right, has been slow to infiltrate into the Western community. Okay, but the local investors in China itself have actually taken notice of Momo as a company, because the local investors, one of their biggest investors or early investors, in fact, is actually Alibaba. Right? Alibaba is actually one of their early investors, and is actually still one of their bigger shareholders over here. And Jeremy, I think you mentioned as well to me before we started the session that Renaissance Technologies is also one of their big investors, together with BlackRock, right?
Yes. They're based on the Simply Wall Street profile of the company, right? Okay, let me just shift over to the. Let me just change my screen, okay? Right, can you see this? Right. Okay, so for Momo, under Simply Wall Street, right? So under the ownerships, right, the company is actually owned, right, predominantly by, if I'm not wrong, this is the CEO and also as the chairman. And then we have the Renaissance Technologies Corporation, BlackRock, Morgan Stanley, Vanguard Group. I keep seeing this group whenever I do screening. And then we have Alibaba, we have HSBC, we have.
Can you scroll to the top again, Jeremy? The first one on the
Sure.
list. All right, now that's pretty awesome, because if you look at it, the biggest shareholder is actually the founder and the CEO itself, and he owns a very substantial interest at about 20% of the company.
Yep.
Yeah, that shows that he still has a lot of belief in the company and the ability to grow the company. Because actually, if I'm not mistaken over here, Alibaba wanted to take the company private. All right, they wanted to take the company private a couple of years ago. All right, but they basically called it off somehow. All right, perhaps maybe because the CEO felt that he could bring a lot more value than trying to let Alibaba take it private.
Well, after my research, I'm not surprised why he chose to reject that.
Yes, because it's a growing business and growing, kind of event. Like, how do I say this? Growing market. Yeah, I think it's more of like a growing market for them. Yeah.
I think it's in the prime spot now, if you ask me, right? Because it is a combination of technology. It's a combination of data, because it collects data from.
Yes, that's the key thing, the data part.
Yeah, and then there's like the social networking portion, and then there's the dating portion, and I think if I'm not wrong, when I was trying out, there was this advertisement gen revenue as well, because I did see an advertisement that was actually pushed to me earlier. So okay. Yeah, so I think the app is poised to stay. Yeah, in a way.
I heard you prepared kind of like a small little surprise before we end the session today, right?
Yes, I did. Okay, so
wait, not yet.
Oh yeah.
who would like to see the little surprise that Jeremy prepared? Type yes or leave a comment yes in the comments box over here. Okay. All right, now, but before Jeremy do that, let me share my trade idea. Okay, because I just wanted to share my thought ideas behind why we brought up the company. So basically, we expect a lot of growth or double-digit growth in the company for at least the next couple of years moving forward. But of course, please understand, right? Please understand, we're still dealing with predominantly a Chinese market and more so a Chinese company. All right, so many of you will probably ask some questions later. I saw a question later, I'll address it. Okay, or let's do it right now. Jeremy, the question is basically, how does it compare to SE? I'm not familiar with SE as a symbol, but I'm familiar with SQ, which is square. Okay, now, so how it will compare to Square is basically, if I'm not wrong, Square is more like a payment processor, but one of their strengths is also data collection. Okay, now, so on the data collection part, they may be similar to how Momo generates its revenue, but Momo has a more how do I say, a more direct or viable platform to their users. All right, because it's on the mobile phone. So basically their users are interacting with the company all day long. All right, versus Square, where they might have to go to a place, they might need to check out before data can be collected in a meaningful way. Okay, all right, but on Momo, it's just a platform. It's like a social media platform.
I think if you ask me, I will answer that in a different perspective here. So
Yeah,
if the
sure.
case if the question is asking whether it's SQ, how does it compare against SQ as well as Square? Of course, I would say that you can't really compare them because they are on one side they are proven blue chips, the other side is a growing tech company. But if you do understand the concept of auction, like an actual auction, because the benefits of a pure auction, like a type 1 auction, right, is where the seller gets to extract the maximum revenue and utility for the service or for the product that they're selling. So what Momo has done, right, is that they're actually able to do so, which will come from the surprise that will be shown later. Yeah, so Square as well as SQ, right, they are respectable companies, but they would not be able to do they will not be able to benefit from this, I would say, irrational kind of spending, if you ask me, as compared to Momo as a company. So if you ask me right now, in terms of recovery or in terms of like outlook prospect, right, I'll say the upward prospect wise for SQ has higher space because SQ as a company has run very low already because it's not making money now. Whereas Momo is already profitable even after COVID-19. But on long-term growth, right, I will not be surprised if Momo will become the next Facebook of China because of how it is building the entire network. It's been buying up businesses that is like close to its competitors or would fit into its ecosystem. Yeah, so that's my view here.
Yes, Jeremy, you want to also comment because I just found out what SE is. SE is basically C Limited, which is the Singapore company, which has been in the news recently. The one that runs Shopee and the game platform Garena. So basically similar mobile platform, payments gateway, games reach, and of course their Shopee app. Anything you want to highlight in terms of similarities or difference?
I would say that the target audience, there will be some overlapping, but the nature of the spending, the nature of the targeted audience spending is very different. It's not something that I can explain in words. It has to be seen. It has to be seen as a surprise later. Yeah, so I will defer that question, and I'll leave it to the audience who will raise the question to have their own opinion here. Yeah, I mean, of course, the stock market is a very unique place whereby anybody can make any money. So, like, it doesn't mean that because there's some bad news, because the company is not really making money, you can't make money from the stock market stock. So, yes, I'm already happy that like Hokwan said, he has been making money from SQ here. But what we're looking out here is not just in terms of short-term play. We're looking out for companies with value in the long run. So what we're looking out at the moment is Momo here. Yeah.
All right, now, yes, and again, okay, all right. I'm not, like for Jeremy and myself, we are of course, not here to discuss the merits of, these stocks itself because at the end of the day, right, as Chinese, we have this saying, right? Any cat that catches the mouse is a good cat, right?
Yes, it is.
Yeah, 能抓到老鼠的猫都是好猫, right? Yeah, that's the saying that we have. Now, so any stock that has been capable of making you money in the recent months itself, anybody's going to call them good, right? But whether they're going to end up being great or not, it's going to be a different story altogether. So that's where we need to seek that little bit of difference over here. So I think to sum things up, Jeremy, I think the main difference that we can see is they are all, okay, first let's talk about similarity. They are all moving towards the same direction. That means they are all trying to create or increase their profits from the new economy. Yeah, all right, okay, that means the mobile platforms and stuff like that and data collections, they're kind of like new way of business growth over here. Right now, but I think the main difference or stark difference between these companies will be the fact that, like you mentioned and brought out earlier, the fact of the profitability of the company. All right, now, so Square and C or SE itself are still really struggling to have a good profitability record. That means they are still really in that growth phase. Right, whether in a growth phase, right, whether they are going to come out victorious or not, nobody can really tell. Okay, because in our okay, maybe in my heydays, Jeremy, in my heydays, all right, we'll probably all remember of companies like Groupon. Yeah, all right. Okay, so Groupon was the hottest story as well. It was the kid on the block. Like the poster boy. And then during the time where it was the poster boy, right, of course, prices are going to rock up. And during the time where the momentum went up, right, a lot of people made money. But it is not that point. It is about, when the momentum runs out, right, did you do something? Are you prepared to protect those profits? Because if you aren't, all right, then, you would have lost the profits that you made quicker than you made them. Because it may have took you like the last few months just to accumulate to this amount of profits. But those profits can be wiped out within, a couple of hours or a couple of days. Yeah, okay. Now, that's really the risk and, the threat behind what we're really talking about over here. Simply because, many of my students will know that I'm not, the hardest and strictest when it comes to charting. Okay, but just trying to put a little bit of things to perspective over here. Give me a minute. I just want to share my screen. All right. Okay, now, just to put a little bit of things to perspective over here, what I have below on the bottom over here are some just basically momentum indicators. Okay, now, so what you can see is just taking into cue from the first one, the RSI, right? Okay, the RSI. Now, what we have is, of course, I'm showing you Square. Okay, I'm showing you Square. Now, if you have made money, congratulations. But what you have really done over here is you're trading into the trend. Okay, trading into the trend, which is not wrong because technicians will always tell you that trend is your friend. Okay, now, but you have to understand as a trend continues longer, right? Okay, the momentum will start to fade out. All right, because when the trend first started, everybody's eager. Like I said, the doors open, everyone is rushing in. But once it starts to get more and more crowded, right, there just isn't space anymore. So people might be interested in going for other concerts instead, or in this case, other stocks. Okay, now, so while you're seeing that Square, obviously over here, let me bring out my drawing too. Okay, obviously Square over here went higher. That means it created a higher high, right? Okay, but at the same time over here, you could see that the RSI actually created a lower high. Okay, it went to a lower high over here. Now, so what really happened over here? Let's see if this did the same. Okay, I need to expand it a little bit. Okay, let me pull this up as well. All right, this was exactly the same. All right, so in terms of just the other one, it did exactly the same. So for stochastics wise, it was the same height, but for RSI over here, it shows that it has lowered momentum. So basically, it just means that there is more and more risk. That I'm not saying that it will turn, but what's happening right now is as you continue to stay long, the risk of staying long is starting to build up. Right. Hence, I'm saying, are you prepared? Are you prepared for when the music stops? You can stay in the stock because like people also say, the market can stay irrational longer than you think. But the problem is this: you don't want to be there the moment people start to get irrational. Yeah, because that's the moment where, like earlier in March this year, that was what happened. People suddenly caught up to the real possible impact of COVID. All right, and then look what it did. All right, it didn't give anyone time to get out. If you got out before, great. If you prepared yourself before it, great. But once it happened, there was just no time for you to get out or even try to get in. There was just no way. Yeah, okay, now, so I'm just trying to highlight to those of you who are playing into this game right now, go ahead, all right, congratulations, but make sure you're prepared. So in this case, right, you might want to start joining in the discussion of the post that I did earlier today in the public Facebook group on Tesla, right? Because it is the same scenario as what I'm trying to bring up right now. Okay, it's exactly the same. Okay, while many of you have made money in Tesla, all right, it's a very similar story as well. All right, now, obviously, Tesla is just went crazy. Okay, now, Tesla went crazy over here, so it went from here, and then, of course, a new high that we see. Now, but at the same time over here, up until this moment, all right, up until this moment, all right, the RSI is actually down. Okay, stochastics is the same as usual. All right, now, so if it's going to push higher, it has to continue a little bit higher from now and then push the RSI even higher than that. Okay, but you must also understand one thing, huh? The RSI is already at 87. All right, how often do you really see at 87? There's once here over here, all right, all the way to 91, all right, and then it hit a double top as well. Okay, now it's not new. Okay, now which means, okay, if you look back, okay, there are occurrences over here. Okay, the higher high over here, and then when the momentum dips, right, okay, you'll start to see the correction. Yeah, okay. Now, of course, this is not like 100%, but it brings out the risk factor of staying invested in such a company. You need to seek alternatives. Okay, be it whether a cut loss or something like that. Okay, now I'm done. Okay, now so let's go back. Let's go back to MOMO. Now, so for MOMO over here, what we've seen is, of course, in COVID, all right, or towards the end of last year to the start of COVID itself, the stock was on a downtrend. Okay, so the stock was basically on a downtrend for quite a while now. Okay, now, but sometime in here, all right, July, all right, it started to consolidate. Okay, it started to consolidate, and right now, the short-term trend is consolidation. Okay, the short-term trend is consolidation, and the long-term trend of the downtrend has somewhat been broken. Okay, now if you look at it, right, the big picture was the downtrend. Obviously, you can see it on the screen, right? That was like the first thing that captured your attention. That's called the long-term trend. That's the downtrend over here, right? Now, but drawing your downtrend lines over here, right? Joining the tops, the resistance, right? Now, so what happens is as the stock continue to consolidate over here, all right, it has broken that downtrending phase. So it is now moving into what we call consolidation. And like Jeremy said, this is one of the hardest time to actually play because Jeremy keeps that long-term potential view, right? But up until the stock breaks out, up until the stock shows that it can clearly break out, that move is not going to happen. Yeah, okay. So having said that, the upcoming earnings of the company may just be that push factor. Okay, because if you can push out a great earnings number, right, then I think we're going to see the stock start, bouncing up. And once it starts bouncing up, once it breaks this current resistance level at about $21, right? High 21s over here. Once it can break out of that, right? I think we'll start to see the momentum on the stock coming back. Yeah, okay, that's basically my objectives over here. Now, so playing into the catalyst and the nature of the stock and the potential, right? And the profitability. And just outright, right? What this earnings season has brought for most companies, right? I'm not saying in terms of earnings number, but it just so happens that whatever earnings the company has announced and put out, right, the stock seems to move up more than it moves down. Yeah, all right. That has been the story of this earnings season, basically. More stocks have jumped up rather than jump down, gap down on earnings release. So moving into that play itself, Jeremy, I'm just going to do a tweak a little bit. Now, so
Yeah, sure.
if I'm not wrong, you sold put spread, right?
Yes, I did.
Yeah. Now, I just wanted to take a little bit of a chance over here. Okay. Now, what do I mean by take a little bit of a chance? Now, which means if I go to MOMO, while I agree that Jeremy, you might want to have a long-term play, but up until now, I may just want to target and play on the earnings first. All right, the earnings first, because if the earnings bring about that breakout, right, that breakout, first I want to be able to capture a low risk profitability from that opportunity. Then Jeremy, when it breaks out, right, usually after a breakout, it will come back and test the breakout point. You understand what I mean, right?
Yes.
Yeah. So usually when a stock breaks out from a line, okay, it will after that correct a little bit, and then towards that line, it will then continue in the next break if the whole sentiment has changed. So I want to make the first break profits from a trade structure. Then if I got it right, okay, I will take out my profits, wait for that correction move, and then position that longer term play. So that means, well, we say the stock has long-term potential, right? But I'll play in two parts rather than one part. Yeah, okay, that means the initial break. Yeah, the initial break, try to profit from that, and then wait for that correction to the support level again, and then get in again, right, with a longer-term structure trade. Because right now, if you're entering on any trade before the earnings, right, you know one problem: volatility is going to be high. And it's already very clear. If you look at the implied volatility on the right corners over here, they are all high 60s, high 70s. Yeah, all right. That shows you the volatility. Now let's see if I'm right. Right now, so you can see even Square has lower volatility than the stock. All right, MOMO. All right, because I believe Square has already announced their earnings. Yeah. Okay. All right. Now, so MOMO. What I'm going to do, everyone, ready or not? Now, so I'm going to take a chance over here by selling at the money put strike, which is 20. Okay, I'm going to try I'm looking at the 18th of September. Okay, because the company is announcing on 3rd of September. So I want an expiry that's after that. And usually the monthly expiry gives us the most liquidity. Okay, so I'm going to sell the 20 put option. Okay, and I'm going to turn around and buy the 19. Okay, now what does this do? What this does is it helps me limit my risk on the entire trade at $1. Okay, so I'm selling the 2019 put spread. That limits the risk to $1. Now, but you can also see a suggested premium collection, right, from the broker, right, tells me that I can look towards collecting about 40 to 44 cents. Okay, about 44 cents from selling this put spread. Okay, now, so effectively, I'm only risking 56 cents, right, on this trade. Okay, because by selling a $1 max loss, I'm actually pocketing up to 44 cents upfront. Okay, so my loss is only 56, the remainder amount. Now, but instead of just pocketing this or keeping this 44 cents, right? I'm not going to do that. Okay, I'm actually going to turn around because I expect the stock to jump on earnings, right? Okay, so if you can see over here, there's kind of like an expected move at the corner over here on the stock, which is about $3.20. Okay, this is what it's telling you by this expiry date. The options are depicting that the stock will move by about this amount. Okay, by about this amount. Now, so what it means is if I tag it on 20.6, and if I add on about $3.20, that will bring the potential upside on the stock to about $23.80. So let's round it off to 24, Jeremy. That means the potential upside, could be $24 if it bursts up. Okay, that's just based on probability. Okay, when it comes to probability. Now, so having said that, it gives me what I call a targeted profitable price. That means a target profit-taking price. Okay, now, so what I'm going to do is I'm going to turn around and buy the $22 call for the same expiry. I'm going to turn around and buy the $22 call and then sell. Okay, and then sell the $24 call. Okay, all right, now, so this basically goes back to our upseller strategy. All right, our upseller strategy in project options cash flow that I covered back in the month of June. Okay, now, so if you didn't catch this particular strategy, please go ahead back to our project options cash flow, get yourself into the list itself so we can resend you the day-to-day strategies that we cover. All right, and then go back and have a look at this strategy that we covered called the upseller strategy. So essentially what I'm doing is I'm selling the put spread. I'm selling the put spread to collect premiums, okay, get someone to pay me. But instead of keeping that money, all right, I'm actually going to turn around and take a bet on it. Yeah, okay, I'm going to turn around and take a bet on it. And that's why I spend that money to buy the call spreads that you're seeing over here. All right, now, but this call spread also caps a maximum profit, which is $2 between 22 to 24. Now, so what's going to happen in different scenarios? One, if the stock goes down, okay, if the stock goes down, that means I'm totally wrong, earnings is bad, the stock gets down. All right, what's the maximum loss I'm looking at? The maximum loss on this trade that I'll be looking at, all right, is going to be $1. Yep, $1. Why? Because, right, the max risk is on the put spread that I sold, which is $1 between 20 and 90. So that's the maximum I lose. Even if the stock goes to 10, all right, I'm going to lose $1. That's it, flat out. Terence, what happened to the 44 cents you collected just now? I already used it. I used it to buy the call spread. Okay, so the money was no longer in the account. I used it up. Okay, so when it goes down and I lose $1, right, I've got to take out that whole dollar from my account itself. Yeah, okay, now, so the max loss on this trade is 1. Now, next. What if, Terence, it only goes to 21? That means it went up, but it went to 21.50. It hasn't crossed your buy call strike yet. Then I lose nothing, right? Because to get this trade done, you can see it's like a 2-cent debit. So I lose a little bit of commissions already. Okay, now, but Terence, what if it goes all the way above 24? Then I'll be locking in potentially, all right, that $2 profit. If I close it early, then maybe, I have to close the entire trade for like 170, 180, something like that. Okay, but that will be my profit. My maximum profit will be $2. Okay, so my maximum profit is when I close the call spread out, which I'm the buyer for whatever premiums that the market is giving me once the stock goes up. All right, and that will ultimately be my profit because I did this entire setup for technically zero. Okay, technically zero. Okay, so on both ends, just think of it this way: if it goes down, right, whatever I have to pay to get it closed out, right, is my losses. Right, on the upside, whatever I get, right, from closing it out is going to be my profits. So right now, by structuring this trade, I'm like right in the middle because I didn't pay anything. Yeah, all right. So I'm like starting at break-even point. So when it goes below, that's where I'm the seller, right? So that's where my risk is. But when it goes above, that's where I'm the buyer. So that's where my potential profit is. Yeah. Okay. So it all depends on from here to earnings, right? Which side that the stock starts to swing. Yeah. Okay. Now, so that's what I'm gunning for over here. So effectively in this trade structure, Jeremy, what I'm ending up doing is I'm risking $1 for a potential profit of $2.
I like that part. Yes.
On the basis of the upside buyer's view that you have. Or okay, I should not use the word upside buyer's view. The slightly tilted upside buyers that you have. Yeah, all right. Okay. Yeah. Okay. Now, so that's my play over here, everyone. Okay, so I think we have both discussed our plays over here. So Jeremy, I see some of them want to know what the surprise is. Why don't you play the surprise? Okay, but before you click the button, okay, let me just get to everyone. If you have any questions over here, all right, please post them in the comments. So after Jeremy has played out his surprise, I will come back. Both of us will come back and manage the questions before we call today's session a close. Okay, Jeremy, take it away.
All right. So before I play, I must give a warning first. Right. So there might be some parts of the video that I'm gonna play that might make some of you not comfortable, or you might find it offensive. So you pardon us if you deem so. Right. It is purely professional in the aspect of analyzing the stock and to understand the company that we are actually making the video. All right. Okay. Let me.
Wait, Jeremy, wait.
Oh.
Yeah.
Why?
Yeah, I help you. Okay, done. Okay, go ahead, Jeremy.
Okay, let me see.
Okay, in the meanwhile, Jeremy, get started over here. If you liked, if any of you really enjoyed the stock and the coverage and what we've discussed today, right? Do do support Jeremy over here by clicking the like buttons. Okay, all right, to let Jeremy know if this week's stock is one of the popular topics over here. All right, okay.
So what I did is I actually created an account yesterday morning, and I basically am running through the app. Okay, so what I can see is that basically the app allows you to, this is like who is nearby you. You can see who is nearby you, the social networking aspect. So you can actually check these people up. And this is like making friends. This is like the streamers that are actually outdoors. And then they have like a label which is like based on their appearances. And then they even cater to audiences who may prefer to have like male streamers, and then like singers, gamers, talk shows, radios. This surprises me. People who follow you to watch the shows, dancers, and then like surprise me. So like maybe just as I was going through, I just choose one of a few of them to the showcase. Like this is supposed to be a singing one. I think, yep. So this is, I think this is a League of Legends. So these are game casters. And then the talk shows. Yeah, I cringe at that as well.
Definitely. Oh my goodness.
Okay, so this is a radio. And then this is like a company to watch shows together. Dancing. So basically over here, I'm just looking out for something that like, these numbers beside the individual streamers, right? I think they are indicating number of audience. So I'm just looking out for something which has higher numbers so I can just showcase it. Okay, so I realized that was a bit too hot for the video here. Yeah, and I was trying to look out for the auction part of the platform here. So I'm looking out for one of those more healthy streamers back then. Okay, so this is when I came across this. Okay, so I need you to pay attention to this part whereby it is something like a PK session, one-on-one session, whereby they're just voting on popularity. So if I understand it correctly, is that the platform will actually match two different streamers by random. And then the bar here is to show that by the account of the gifts that the respective audience gives to the streamers, who is the winner. And then usually the loser will have an agreed forfeit beforehand. So pay attention to this part whereby there'll be a red color gift that's given out. Yeah, so pay attention to the frequency of that. So this is the second round of this PK session. Okay, so this is the first of this gift. Second of it.
哇！小手男的从天而降，谢谢。
我先睡了，我是顺便来看你线毛哥哥。
谢谢我圣诞哥哥，谢谢。
谢谢草的支持，感谢我们家瑞瑞。
哇，谢谢你从天而降，谢谢。大家众筹一下，我的天哪！这个哥哥不在了，那个哥哥来了。哦呦，我这个运气真的太好了吧！谢谢我圣诞哥。哇！谢谢我圣诞哥哥，谢谢，差一点点。感谢我圣诞哥，谢谢。
Okay, so over here, if you notice, there's a third of it, right? So what I was doing is I was actually clicking on the app, right, to see the gifting portion. So this gift here called the 上上签, right, is the one that the red color gifts that is being gifted earlier. So you will notice that if I tap on it later, you see this is 399 of this MOMO B, which is their coins here, 399. So you'll be wondering, like, what is this value here? Okay, so later, if you see, like, there's the different range of different gifts that you can be given here. And if I understand correctly, is that as you spend more, you get rewarded higher VIP levels, and you can have a more range of more expensive gifts to give to. Okay, so earlier the gift was about 400, 399. Let's round it to 400. So we're looking at 3 gifts in the span of close to a minute. So 400, and the exchange rate is about 400 of their coins, which is about 40 RMB. So let's multiply by 3 is 120 RMB, which is about 24 Sing dollar. 24 Sing dollar. Yeah, so in just a span of like 1 minute, right, in this kind of events, right, in just one of these rooms, right, of these PK sessions, right, the platform is actually able to extract by means of an auction. I call it an auction, right? Because of gifting, the revenue through the means of the interaction between the streamers as well as the audience here. So I think this is why I say that you can't really explain the spending pattern of such a target audience, the consumer group, because it's not something you will see. I think the closest way you can relate these two is actually, I think, in the Thai disco. Yeah. So yeah. And I think that's the end of this surprise here.
All right. Okay.
Yeah.
Right now. So when Jeremy told me that he prepared something, I was like, okay, I'm gonna go with your professionalism on this. I'm gonna trust you on this. Okay. But yes, it does highlight the certain potentials. And if you look at it, Jeremy, just now, I realized you were scrolling through all the different categories that was available on the platform.
Yep.
And it actually covers various aspects. You know, for people who just want to watch like a drama together, or someone who wants to connect with other people, someone who is looking to watch dances, someone who's looking to listen to people sing.
Yes.
All right. And we all notice that these are all very hot and popular things in China, because, you know, you have so many reality like singing competitions in China and stuff like that. They are really, really huge. All right. And, you know, I think the platform does a lot in trying to capture their audience and, you know, to build on their audiences,
I think it does here. And there's this, I would say, urban legend at this moment. I can't really verify that, but in the internet space, right, there's this saying that there are actually companies that actually goes out of their way to source for attractive young ladies to groom them into models for such platforms. What they do is that they maybe, for example, let's say we hire this model A, and then we're gonna put her into this platform, and then we're gonna throw in the seed money, and then we're gonna game the algorithm of this platform such that she will top the charts. Once she tops the charts, right, she will be visible for the other audiences as well, and that's when the money comes in. So the seed money will then be returned, because the model will then be able to have a cut of the returns from the revenue from the gifts that she receives from the other audiences here. So the thing about such a such an ecosystem is that it's not just a B2C model whereby it's a business to client model. It's actually in a way also a B2B model here. So yes, I do agree, right? Like what our viewers say, that the competition for such a platform is very high. Yeah. But I think in terms of the fluidity nature of such a what I call it, consumer group, yeah. So the competitive nature is fine here because eventually it will become like a niche. I do foresee, if you want to really look at it, it will be something like a Samsung versus Apple kind of thing. Yeah. So if the streamer that you are with, or if the platform that you're more comfortable with is, for example, Momo, you stick to Momo, or if you're more with Ouya, you stick to Ouya. It's not something that we can really understand and really integrate in when we are here in Singapore or Southeast Asia, when we're trying to understand what Chinese culture is. But
I think
in
it's
terms
a
of the business,
different appetite altogether. It's like, people like the choice of between Instagram and Twitter. It's just different.
Yeah.
Or like Coca-Cola and Pepsi, different countries prefer or predominantly have a taste flavor towards one of them.
Yes.
Yeah, it's that kind of thing. But the understanding that the market is so big in China itself, that shows that, at least on a base point, right, Momo is profitable and he has proven to be profitable. And of course, the plus point is that the founder and the CEO still, owns about 20% of the entire company. Right, so I think I see that as a plus point. Yeah, all right. Vested interest. I think more in the sort of vested interest. Yeah. All right, now, so let's go ahead and answer some questions before we end the session, Jeremy.
Sure.
All right, let's tackle the first one. Vincent, all right, do you mean that September 18 and the market correction on the new high, we will sell the put spread for January? No, we're not. I'm just saying that how I will potentially profit from upside move on the stock. I don't know what will happen. All right, I don't know what will happen. I'm just trying to come up with different plays based on what I'm seeing right now. So based on what I'm seeing right now, it is consolidating. So if it's consolidating, there's only two ways for me to profit. One is to try to sell some put options and then hope that it doesn't come down, right? Or two, to buy some call options and hope that it goes up. So by the trade that I'm suggesting today, all I'm trying to do is to get a little bit of both sides. Okay, a little bit of both sides over here. Okay, all right. Now, so what will happen after that? It will depend. It will depend because maybe it's just going to break out and then it's never going to come back. I won't know as well. But when it happens, then I can reaccess and then redecide if I still want to play it and how will I play it. I think that will be the most exact answer over here. All right. I think some of you were asking, is it listed in Hong Kong stock market? So Henry, thanks for answering. All right, it's not listed in Hong Kong, so they've gone straight to the US over here. Will there be any guidance when it comes to closing the trade? For this particular segment, that means the nitpicking, stocks nitpicking with Jeremy and myself every weekend, right? We are simply covering stocks and we're throwing out potential trade ideas. Okay, so that's why we say over here, if you're going to follow any of the trades, please make sure you're familiar with the strategy, all right, before doing so. Okay, because we're just throwing out potential trade ideas and then you have to weigh your risks and cons, pros and cons, and then decide which one you might want to take. All right, and then of course, after that, you will have to manage those trades. Okay, please understand, these are a little bit different. So over the weekend, we're just trying to pick one stock every week, all right, to discuss and then to show all of you potential different trade ideas that you can form using options. And then on Monday sessions, where I have the portfolio building with Terence, those will be where I actually put the trades in my portfolio itself, and I'll be tracking them each and every week. Right, so it is different approach altogether. Okay, so in short, the answer will be no. Right, we will not be following up on these trades actually. Yeah. Okay. Next one. Can we use the sell put? That means the premiums from the sell put spread, and just add on the buy call of 24. All right. Now the answer is no. The answer is no, because when I buy the $22 call option, the moment the stock goes up and above $22, I'm starting to make money. Right? But if you're buying the $24, that means the stock has to go all the way to 24 and above 24 before you can see some premiums, all right, when the option expires on 18th of September. Now, so what you are doing over here is by just buying the $24 call option, you are making it more difficult to profit on buying the call option. Okay, now, once again, if you're not familiar, Jeremy, could you just put up the banner at the bottom? All right, if any of you are not familiar of the differences of how you make profits and losses when it comes to the different option strategy approach, right, just head over to our website, www.impossibleinvestor.com, right, and then head over to this segment called Project Options Cash Flow, right, Project Options Cash Flow, and just opt yourself in, okay, and we will start to send you daily option strategies where we covered when we did this in the entire month of June. Okay, so you start to get familiar with all the different option strategies and then start to get a better understanding, okay, of how you pick your strike prices, how does it affect your profitability. Yeah, okay. Now, so this, stocks nitpicking is really a follow-up from the Project Options Cash Flow. So that's why we won't really go back to the basics of each different strategy that we cover. Okay, so if you want to be able to catch on and follow up, please make sure you have done or completed Project Options Cash Flow as well. Okay, or get yourself going so you'll be able to keep up with us, right? Okay, so another question as well, follow the suggested trades, will there be follow-up? No, YC, I just answered this in the previous question as well. Unfortunately, no, we will not be following up in this segment. Okay, Will, hi Will again. All right, now the earnings trade, is it better to set up stop loss? Will, the put spread is a stop loss trade, because no matter where it falls, as long as it is below $19, I have a max loss of $1. That's it. That's how it works. All right? Because by selling the 20 puts, I've obliged myself to buy a stock at $20. Okay, but by buying the 19 put, I have given myself the right to sell the stock at 19. So what I have is I have a buy stock at 20, sell stock at 19. So no matter how I look at it, right, I own both sides. Okay, I have both sides now. So no matter where the stock goes, even below 19, I get, I can activate those two over here. So I'm just going to look at a $1 loss. Okay, Will? All right, same thing as well. Head over to Project Options Cash Flow. Cover the segment of sell put spreads as an option strategy. We will cover this scenario in there as well. Okay. All right, now, so yes, Will, this is pretty much a follow-on from the first part of your question. All right, awesome. Okay, Jeremy, I'm done with the questions. How about yourself? Anything to add?
I think let's address Uncle Fu's question as well.
Right, great. Go ahead.
Okay, so Uncle Fu basically showed us the results from the last earnings, and the summary was that he gave a highlight on the May 2020 quarter earnings, and that it appears that there's actually active user drops. That is right, because you see, the thing is that in the report, right, the company attributed the fall in the number of active users, right, to the COVID-19 situation in China as well. Well, it's pretty convenient at this point in time to just attribute anything to COVID-19. I will have to admit to that. So the current earnings on the 4th of September will be an essential one, because we really need to see whether the number of active users continue the trend. As long as they have signs of recovery, then the company will be set in a very good footing in terms of to actually benefit in the long run here. Yeah. At the same time, right, the dampening result in the last quarter, right, it also allows us, right, to have a one-time moment at least in maybe the next few years, right, to have a similar value, right, to really look at the stock again. Because without this, right, then when the company is all green and all rosy, right, we wouldn't have this kind of price point to look at for this company. We'll be looking at more expensive stocks for similar profile. Yeah. So yes, that is why when I suggested the trade in terms of the put spread here, I don't even have a cash cover, because I'm concerned whether the outlook for the earnings will be drastic and will affect the stock downwards. But on overall long-term trend, I am bullish on stock. Yeah.
All right, Jeremy, I think we also discussed this before we started the session, the part where, recently the stock was on a downtrend, possibly because of the difficulties that they face, right? And, Uncle Fu just highlighted that. But this is also where we were also saying, like Uncle Fu, we were also saying before the session that the upcoming earnings is going to be very pivotal, right? Because in the upcoming earnings, right, they are able to show that the users are back on track. They have come back. All right, then things are going to look rosy for the company again. So if it's going to lead to a breakout, right? So that means it's like we're going to see like a total reverse after that. Because for these companies, right, that's how they play. It's always down to active users and then how they gain market shares and stuff like that. Yeah. Okay. Yeah. Right. Now, so that's pretty much what we're covering over here. Just one last one over here, Will again. All right. Was that the iron condor strategy? No, Will. All right. No, this is not. Because iron condor strategy is basically the same direction on both sides. So either I'm buying the call spread and I'm buying the put spreads, or I'm selling the put spreads and I'm selling the call spreads. Both sides are doing the same thing. All right. Now, what I'm doing is I'm doing the opposite. I'm selling one side and I'm buying the other side. Okay. All right. Now, so also try not to. I know it's very technical and try to follow textbooks and stuff like that. But these are just fancy terms for how they combine different option strategy plays. That means how they combine a put option and how they combine a call option. Right, and then what kind of a term do they call it? Now you can also look at them separately. So essentially, I'm selling a put spread, right, and then I'm also adding on a call spread, a buy call spread. So what exactly am I trying to achieve from each of these strategies? Okay, think of it that way. It might be simpler for you to finally get the view on it. Yeah. Okay. All right. Now, YC, how long will we be doing this? As long as Jeremy can give me his weekend. Jeremy's a busy man. Right now, so let's do this. We both of us will do as much as we can over here to dedicate that weekend. But having said that, we also strongly believe in the balance of life. So we may take breaks here and there, but we will try to keep this segment going. Yeah. Okay, all right, now, so for the benefit of all of you, all right, who have shown us your support and also your interest in the topics that, we bring up to you each and every week. Now, so this is why really do help us by sharing out the videos, right? By sharing out the videos, because that would pretty much mean that, Jeremy is stuck. Jeremy is stuck because the more support he gets, right, the harder it is for him to say, no, Terence, I cannot do it. Yeah, all right, now. So, yes, thank you very much. Isaac, I think you have a question on a stock. Can you bring it up tomorrow in my segment for portfolio building? Right, because somehow I think the TD Ameritrade, the charts are not working right now, so I can't give you an analysis. All right, so join me at 9:30 p.m. for portfolio building with Terence tomorrow. Okay, let me bring it up. All right, so join me tomorrow night for my portfolio building with Terence segment at 9:30. Same Facebook group in this particular new public Facebook group where I'll be streaming the live sessions as well. Okay, so once again, thank you very much for those of you who have joined us on the weekend over here. All right, please go ahead, have your dinner for Sunday night right now. Go back to the people who are important to you, all right, and spend the remaining of the weekend with them. And I'll see you all tomorrow night at 9:30 p.m. Okay, when the US market opens again for another trade. I do have some trade management which I'll be taking on for some of the open positions that I have currently as well. Okay, all right, see all of you tomorrow night at 9:30 p.m. Remember to share and get more of your friends to join us in the public Facebook group that we have newly set up and we have told all of you about last week as well. Okay, all right, so the address is in our Telegram group as well as scrolling at the bottom of your screen right now. Okay, share it with your friends who are investing in the US markets, and we look forward to continue to bring you good content over here. All right, thank you, everyone. See all of you. Bye-bye.
Bye, everybody. Enjoy the weekend. Bye-bye.
All right, welcome. All right, bye-bye. See you, Uncle Fu. Welcome, Jacqueline.